Hey there traders, thanks for joining me for another free video from thestockbandit.com. I'm sure glad that you're able to join me. So, it's the weekend, and what we always do is take a look at the major averages. We know that the overall condition of the market is really what's going to dictate how most individual stocks move, and then we can make a better plan according to that. So last week, here's what took place. This was the prior Friday, and this is where we closed on Friday. NASDAQ gave up about 100 points on the week. Most of that taking place Monday, Tuesday, and Wednesday. We saw minor attempts at bounces on Thursday and Friday, but take a look here at what took place. The upside was very limited. We also saw closes at or near the lows of the day on both Thursday and Friday, which really indicated that intraday we were getting some selling. So the highs of the session were made in both cases, and we finished considerably lower from there each day. Now, we have broken through this 2600 level, and we have yet to reclaim that. In bigger picture, these are the two big levels to watch, these two blue converging trend lines. They are marking, obviously, the uptrend line, marking higher lows here on pullbacks, and then this downtrend line marking lower highs on bounces. So we're getting kind of wedged here, and ultimately, this may produce a sizable move one way or the other. For now, we're still somewhat range bound. We can't really trust this market to make lasting moves until we get clean breaks of either this lower trend line, which for the NASDAQ is about the 2495 area, or this upper trend line, which is about 2650. So those are the big levels to watch. If we reclaim 2600, then we may be looking at a test of this 2650 area. But short term, we've still got some room to move lower within this range. Keep in mind also that this is an unfilled gap right here that starts right here at about, well, for the NASDAQ, that's about 2507. And then beneath that, we've got kind of this air pocket down to 2441. So those are another couple of levels there to take note of. For the S&P 500, last week, this index gave up almost 3%, not quite. But this was the prior Friday. We saw weakness Monday through Wednesday, and then here again, very limited bounces on Thursday and Friday, and in both cases finishing at or near the lows of the session. In fact, that was really the case all week last week. We finished closer to the lows every day of the week than we finished to the highs on each of those days. So lots of bars with plenty of room above this closing hash mark in each case. But for the S&P, we're still short-term holding above this 1208 level. Keep in mind that was the initial bounce high back there in early August. It's proven to be still a level that's being respected on both sides. Currently, it's holding as some short-term support. Beyond that, we've got these two blue trend lines. Those are the converging lines here, again marking a higher low and some more recent lower highs. So those levels for the S&P, the lower end is about 1188, upper end about 1260. Until we break out of either one of those levels, we can't expect lasting moves in either direction. Momentum will be fleeting, and this market will continue to be a little bit tricky from a day-to-day basis. Russell, looking very similar, really respecting the 718 area. It's kind of danced all around it last week. Finished just barely above it, but here again, that's the initial August bounce high. So 718 has been validated a couple of occasions and then proved as support here for the bulk of November. Now we're dealing with it once again, but we also have got this blue wedge that's kind of developing here as well. Upper end for the Russell is about 747, lower end about 689. So we're kind of smack dab in the middle of this range. Can't expect much lasting movement. One more to show you, which is the Dow, and here again we're kind of caught between a couple of key trend lines here that have been important in the intermediate term. So the upper trend line is really up here about 12,250-ish, lower one about 11,500. Call it that. Now, one more thing to mention. We're coming into the last, week and a half or so of the year. And whenever that's the case, there are some other factors that really aren't present the rest of the year. So it's very important that you and I as traders pay attention to that. We've got obviously tax-related sales. So people looking to either book gains or losses for this calendar year before it's over will be doing some of that. We'll also be seeing portfolio managers look to kind of get positioned out of certain names that they don't want on their books at year end and into other names that they do want to be reflected in their holdings. And then you've also got just the holiday volume and the lack thereof, being that traders are traveling, taking vacation, just doing things other than really fixating big on the market. So stay small these next couple of weeks, especially. Be very selective out there. We're still caught in these big ranges for the indices. So whenever that's the case, we can expect very limited movement. So it's necessary to shorten time frames and stay very selective, especially given all these year-end cross currents, which really aren't here the rest of the year. Okay? Thanks for joining me for this free video. I will be back here soon with more for you, but in the meantime, trade like a bandit.